Hello traders, Corey Mitchell of TradeThatSwing.com. We're going to look at the stock market swing trading outlook for the week of November 10th. Going to look at stocks, gold, and Bitcoin. Yeah, you'll see that up there right now. Any courses are on sale. Stock day trading course, Euro USD trading course, swing trading course, Forex swing trading course, stock investing ebook, Forex introduction, anything 20% off right now. Use code HOLIDAY 2025. That is for early Black Friday and through Black Friday. Okay, let's get to the outlook. I don't have too much to add from recent weeks. I don't love what's going on out there. It hasn't turned horrible. It's just not ideal. I like easy money conditions, and I don't feel like anything's really easy money. I'm not loving it. There may be like one individual stock out there or something every once in a while that has a nice setup, but for the most part, yeah, I'm not loving it. So stock market conditions are mediocre. Current conditions, not easy money, and I like to trade in easy money environments. Gold has had a significant pullback, which also indicates not easy money. We'll talk briefly about that. Bitcoin chopping, also not easy money. So I'm going to stay out. Current swing trading watch list. Well, it's not current because I haven't been updating it. No point. I'm not really trading on the long side. This one was updated a little more recently. Best swing trading stocks list for November. And it's just the really strong momentum stocks and really weak momentum stocks. Let's look at the price action. So you can see in late October here, we had this run, or mid-October, we had this run up, and these ones didn't really make new highs. The NYSE composite, the Russell, Canada. So this one, I could have thrown a little box around this one too. You can see we're stuck in a little range for the last month on this one. Kind of month and a half. Well, about the last month on this one too. And yeah, last month or so on this one as well, just kind of stuck in that range, whereas we had the little pop out on the S&P. So overall, everything's still in an uptrend. We haven't had anything really that's knocking out prior lows, and so still holding the uptrend, and a little bit of a difference here in how some of these indices are performing. These ones a little bit more choppy. These ones had a little bit of a run there, just showing, hey, the big caps were, whoa, my face is right in the middle of that. I think no matter where I go, I'm going to be in the way. Yeah, so a little bit of a difference, but not a major concern. Bitcoin, this is a 2-day chart just so I could get a little bit more action. This is going back to the start of the year, and you can see when it kind of breaks out of these ranges, it's not really making too much progress. We chopped around, so we chopped around here, tried to go up, we formed a little range there. That's kind of been expanding, and right now we are below that range that we were recently in. So to me, that's not really uptrending behavior, right? It'd be like if these ones start breaking down out of their ranges. Now what I like to see to give me some confirmation is if this bounces up and starts holding this area and then rolls over again, or better yet, continues dropping, holds below this area, keeps dropping, it's showing us that it can't gain traction back up into these higher areas where it was before. Same thing with these ones. If we look at the Russell, so if this breaks down, has a pullback, holds outside or very close, and then starts rolling over, that helps confirm that we can't gain traction back up into this old range. It's a legitimate breakout, likely to head lower. Now, I'm not saying that would happen. We have to wait for that to happen. We could get a little move down below, and then if it goes back up into that old range, that's actually probably a bullish signal. Did we look at gold? We didn't look at gold. So I didn't leave it on this chart, but when the gold has had an 8% or bigger pullback in the last couple years, generally not much was missed by sitting out for a while, because it either continued to drop, which happened here. We're down about 11% from the high, or it continues to chop around for a while, and usually it's both. So we get a little bit deeper pullback, plus it doesn't necessarily just turn higher immediately. So the 8% seems to be a little bit like falling down the stairs, where it's a little tough to get up after. And that doesn't mean it can't go up later. It just means I'm okay to let this play out for a little bit, see a little bit of bullish price action come back in. Yeah, I feel no rush to get back in. We've kind of stumbled. That stumble over the last couple years has not been ideal for the price action in the short term, so I'm okay to sit out. And that would, of course, go for the miners too. So leaving that industry alone right now for the moment as well. Stock market health indicators, again, mediocre, not horrible. S&P still in this uptrend overall. Volume not important to me at the moment. This is percentage daily movement, and what I'm really looking for is just 2% drops tell me to be very cautious. I'll step aside. We had one here. You can see when they occur. Usually we're not missing out on too much if we step aside for a couple days. This one continued to chop around for a bit before moving up. And my other indicators weren't good anyway, so I wasn't super interested in going long anyway. But yeah, so we have gone back to quieter movement, and that's more indicative of uptrends. So I would say this is good at the moment because we have recovered that drop. We dropped below it. We had a nice move back up above it, so it kind of became a bit of a non-event. And we'd been quiet before. We're pretty quiet since. And if we get another big drop, that would instantly, I'm already on the sidelines right now, but that would say, yeah, don't get in, and would probably turn some of these other ones negative. This is advanced decline line. Advancing stocks minus declining stocks is a cumulative number. And this was a little swing low here, which correlated with, I think it was like this point here. And you can see the ADL is kind of stuck below that point while the S&P is above it. So that's just a little bit of bearish divergence. I wouldn't say that's big enough to be a problem, but it's not bullish, that's for sure. So I put it as neutral. If this were to continue to weaken, I would turn that to a frowny face. For example, like this low here, the equivalent low on the ADL is here. So if the ADL were to drop below that while the S&P was still hanging up here, I would see that as kind of a bigger divergence. Right now, this is borderline randomness. It's like it's not a huge level or anything, so it's not great, it's not horrible, it's just kind of neutral. Up volume divided by total volume, nothing recent. This is just looking for extreme, either almost all the volume that occurred during the day occurred in stocks moving to the upside or to the downside. So a really high level would be all the volume occurred in stocks moving to the upside, most of it. And the low level would be most of the volume occurred in stocks moving to the downside. And we haven't had any of those extreme readings. Percentage of stocks above their 50-day moving average, you can see kind of around the 40% mark. Not ideal, right? It's going to be a lot easier to make money when most stocks are moving up, and that's not how it's going right now. And we can see that also from the price action of the indices. Pretty choppy on most of them, except for the large cap ones, the S&P 500 and the NASDAQ. They did have that move up right here, whereas the other ones have been chopping around. So kind of indicative of the price action we're seeing, that we'd see this. Just not a lot of stocks are, yeah, just flying up at the moment. So that doesn't mean there aren't some individual stocks that are maybe performing okay. It's just when you look at sort of the broader conditions, and when conditions are really good, you can trade almost any stock and make some money. When conditions are not as good, it's extremely selective, and most people end up getting chopped up, losing money. So it's better just to step aside, and that's what I'm doing. So what am I doing right now? I need to see improvements in all these things before I'd want to get involved. I look at current conditions and whether it warrants me taking trades. It doesn't look like easy money to me, so I'm going to stay out until those conditions improve. I'm always day trading, so there's been phenomenal movement in day trading. It presents opportunities every day, whereas swing trading is more, I'm in a inactive period right now. I'm not taking any trades at the moment, swing trading, but day trading, there's always action. So swing trading, periods of action and inaction. So I like to combine both. That's up to you whether you wanted to do that or not. Happy trading out there.